Would you like to take back control over your investments and increase your profit-making potential from the stock market? Then consider becoming a do-it-yourself stock investor. Rather than pay a mutual fund advisor to hang on to your investment capital within a lackluster portfolio, now's the time to learn how you can consistently beat the market averages. As a do-it-yourself investor, you'll have better control over when to move into and out of positions, thereby optimizing your profit potential. You'll even be able to benefit from generating consistent cash flow from both stock and option plays, thereby compounding your returns that much faster. And once you see a steady stream of cash flowing into your brokerage account, your confidence will soar and you'll be wondering why more investors aren't doing the same thing. Here are 7 steps to empowering yourself as an actively engaged investor. The first step is to assess whether or not you personally have what it takes to do it on your own. Moving from the realms of a passive investor to an active one will require 2 things of you. You'll need to assess whether or not you have at least a base level of interest in learning about the wonderful world of stock investing. The next factor to consider is whether you are willing to make the initial time commitment necessary in the beginning to improve your level of financial intelligence so that you are able to learn the ins and outs of investing. Your time commitment as an investor in any market requires that you learn about the particular market. Take the time to identify potential opportunities with a high probability of coming out on top, and set aside enough time to monitor your holdings so that you can systematically move into and out of your positions so as to optimize your profitability. The initial time commitment up front in learning about the fascinating world of the stock market is well worth it down the road, especially when you learn how to combine the power of using option plays on stock that you own. The second step is to determine how you're going to find the time to learn about, research, and monitor your positions. As you already know, life is all about choices. Today may be the day that you choose to become the best investor that you can become. Speaking from personal experience, it is well worth the time commitment when you arrive at a point in your investing prowess where you can consistently generate significant returns from the stock market. Step 2 involves reallocating some of your time spent doing unproductive activities to specific action steps that will move you forward with your new adventure. Where could you free up an additional hour throughout your day? How about freeing up some time by listening to an audiobook about investing while on your morning commute or walking the dog? Or how about spending an hour researching some potential businesses rather than vegging in front of the TV? Over time, these 30 to 60 minute blocks of time will quickly advance your investment knowledge, empowering you as an investor. Step 3 is to plan for success. Once you have determined when you can free up some time each day to advance your financial affairs, the next step is to create some specific what goals that will keep you focused. What goals are those specific tasks or steps that you need to follow in order to eventually realize your dream lifestyle? Ask yourself, what do I need to do today and this week in order to become the best investor that I can become? Jot down several daily and weekly goals in your planner, agenda, or on a calendar to remind you of those tasks you should be completing. A great time to do this is either first thing in the morning before your day begins to unfold, or at the end of the day so that your subconscious mind can begin to reprogram your current daily routine to something more productive. By focusing on what you are doing, you'll maintain a healthy level of motivation that moves you closer to arriving at why you chose to become a do-it-yourself investor in the first place. A part of becoming a great investor down the road is in creating your winning mindset. Your winning mindset will begin to develop when you plan for success. Step 4 is to set up your trading platform with an online discount broker. Most online discount brokers have low transaction fees, which is desirable for the do-it-yourself investor. If you're going to combine the wealth generation potential of selling call options on stock that you own, then set up self-directed accounts that allow for both stock and option trades. My 2 favorite accounts are a Roth IRA account for U.S. investors, such as my wife, and a US dollar RSP account for me since I'm Canadian. These basic accounts will allow you to trade both stocks and options once you've set them up with your online broker. The online application process has become simpler over time, with many discount brokers offering their new clients various options for setting up and funding self-directed accounts. The biggest advantage of a Roth IRA is that it allows you to compound your wealth from within the account to be used tax-free down the road. A minor limitation is that current annual contribution limits are $5,000 if you're under 50 and $6,000 if you're 50 and older. As well, the cash being deposited into a Roth IRA is not exempt from taxation like a 401k retirement account or a traditional IRA account. The real benefit of the Roth IRA shows up 10, 20, or 30 years down the road when you tap into your nest egg, which now has a tax-free status. If you crunch the numbers, you'll quickly realize that this account, for most individuals, will preserve your capital longer than tax-deferred accounts. For my investing, I prefer using a US dollar RSP account that gives me a tax deduction up front, as well as the ability to trade in the US markets without incurring currency or interest charges that can happen within a normal RSP account. Of course, the downside of any Canadian RSP account is that your capital is taxed upon withdrawal. The Canadian tax-free savings account, which is similar to the Roth IRA, is an alternative account to consider using. However, your best bet is to use it for holding dividend-paying Canadian stocks rather than trading stocks and options in the US market. You'll be taxed from the US side for US-held dividend-paying companies, not to mention the challenge of managing your TFSA account for currency exchange. Step 5 is to set up a saving routine earmarked specifically for investing. Once you have your account open, you'll need to set up a saving to invest regime that systematically puts cash earmarked for investing into your investment portfolio. A common goal is to set aside 10% of your earned income for investment purposes. For me, there are only 3 major types of investments that I make with the capital that I have set aside and allocated for investing. They are my financial education, acquiring cash-flowing assets such as stocks or real estate, and building systematized businesses that generate passive income running virtually on their own. Initially, as a do-it-yourself investor, your primary focus should be investing in your education by learning more about investing and also setting aside money to eventually acquire cash-flowing assets such as stocks with option positions layered on top. Should you be short on investment capital initially, consider raising some cash by implementing one of the 2 following strategies. The first is to consider selling something on Craigslist or eBay that you really don't need right now. Do you have a spare TV, recreational vehicle, extra sofa, or other items that won't be sorrowfully missed in the short term? You can always pick up the latest model down the road once you are consistently generating cash flow from your investments. The second strategy is to set up a part-time business that taps into one of your current skills or talents. The money brought in from your hard efforts should go almost exclusively to build your investment portfolio. Sure, go ahead and reward yourself each month for the extra work you've been doing by spending a portion of your earnings on creating memorable moments that'll keep you motivated and focused. However, the focus should be on building up your savings so that you can allocate the funds for various investment opportunities. Step 6 is to initially fund your online brokerage account. You have 2 options. Option A is to inject new funds into your account up to the allowable limit. Option B is to transfer funds from an existing account which is managed by a mutual fund advisor or broker. Your mutual fund advisor, fund manager, or stockbroker all want to keep your money because they systematically take money out of your pocket, transferring it into theirs through recurring fees and commissions. They'll do anything and everything in their power to hold onto your capital because it represents a good portion of their livelihood. Watch out for these false arguments against you becoming a do-it-yourself investor. You may hear some of these statements once you initiate the transfer of your assets from their control to a self-directed portfolio. You don't know what you're doing. You don't have any experience. Investing should be left to the professionals. Nobody beats the market anyway. If the pros can't do it, you certainly can't. And if you could do it, everybody would be doing it. Taking the initiative to transfer your holdings and retain greater control over your money-making opportunities can be a stressful period of time. You may start to believe the false arguments presented by those you trusted with your money in the past. However, as your financial intelligence increases and you learn how to make money under various market conditions, you won't want to go back to a historically lackluster system. According to James O'Shaughnessy in What Works on Wall Street, 70% of mutual funds covered by Morningstar fail to beat the S&P 500 over almost any 10-year period. No wonder more and more investors are following the path of becoming actively engaged investors who have better control over their financial affairs. And finally, step 7 is to engage in the learning process about stock investing and options trading. It is through financial education that you will create your dream lifestyle for you and your loved ones. Imagine being debt-free and able to see a consistent stream of cash flowing into your bank account from your investing endeavors. Learning about the wonderful world of stock investing can move you that much closer to realizing your dreams. Should you like to learn more about becoming a do-it-yourself stock investor, then please head on over to Stock Investing Simplified, where you can enroll in a complimentary video tutorial series called The Fast Approach to your ongoing success as an investor.